Good day to one and all. This is Dr. Sivaraman of iknowindices.com. Today, during this Asian session live market analysis and the forecast webinar, I am going to review the forecast what I have given it on 30th of Jan, that is on Monday. And today we are on Friday, 3rd February, between 5 and 5:30 GMT. I'll try to review the forecast what I have given it and find out how dependable the forecast is. My contact details are given here. My email ID, Skype chat ID, and also the website details are given. URL is given. So that if you need to contact me for further clarification or any other help, you can always do so using the link. So basically, we will be taking into consideration the derived forecast, along with that of the levels in which the currencies are expected to swing, then the market reading using the initial lows and the highs, and with the help of the live market code page, we try to read the market from time to time and understand what sort of moves they are going to make in a market so that we'll be able to plan our trades accordingly. And as human, we are bound to commit mistakes from time to time. So in the event if our trade goes wrong or if the market goes against our expectations, then we need to have the trading strategy to limit the risk and maximize the profit. So that also is being taken into consideration as part of the trading system. So first of all, we will see the forecast, what I have given it on Monday, and see how far the market has moved in line with that. So on Monday, they made the firm up on the slide and firm up move. And then Tuesday, they started gaining the levels. Then from Thursday onwards, they started making that drop again. In the case of Euro and GBP, they are making alternative moves in Euro and GBP. And finally, today we are on 3rd of February. They are expected to make the gaining moves all the 3 sessions of the day. So here you find that this being the month-end trend reversal time, that is the month of Jan gets over and the new month February starts in this week. In 5 days, they just make an extreme move for that of the month end, and then the extreme move again for that of the month beginning time. They are expected to gain levels again in the case of Euro and GBP, irrespective of the fundamentals. And this is what we need to know from that of the market. So the intention of the players is to gain the levels, and you could come across from time to time the fundamental data release, etc. The market might react to that temporarily, but the long-term move the players want to do is the gaining moves in the case of Euro and GBP. That's what we need to understand. So drops are buy opportunities in the market so that we will be able to book profit during that of quick gains in the month and the new month beginning time or the monthly trend reversal time. But from next week onwards, they are expected to make the trending move. So from 6th to 10th of February, we could come across the upward trending move. So they will be making less drop and more rise move, where small swing and then gain, small swing and then gain. That sort of move they are expected to do. So at that time, they will make week beginning false move on Monday, a drop. Then Tuesday onwards, they will continue to gain the level. But during the trend reversal time, they just make the drop on Monday or gain on Monday, Tuesday drop, and again gain on Wednesday, then Thursday drop, and then Friday gain. That sort of moves they make it. So you should be able to differentiate. And with the help of these session-wise forecast, we will be able to easily recognize the type of moves they are doing it and trade accordingly. Now coming to the levels, coming to the levels, they are expected to swing. Came down to that level of 1.0620. The estimated low was 1.0650, and then they went up to 1.0829, and then they are holding around that 1.0750 area. They are likely to gain more levels today to above that of the high. Then in the case of GBP, they came down to 1.2413. The estimated low was 1.2450, and actually for during that of the on Monday they were trading around 1.26. From there they dropped it to 1.24 and then started gaining to 1.27 and then come down again to 1.25 area to gain back again the levels during this week, during this day. Then in the case of yen, as I explained, that they could make extended downward stop, and because if they find more traders are holding long positions, they did it up to that of 112. The estimated low was 113.50. They just made another drop of 150 pips from there and started gaining the level. And the high level was around 114.95 on Monday. They showed it, and they are likely to go to that level by today. Then in the case of CHF, they came down to 98.70 and 99.00 was the expected mathematically derived low, and then they went up to 1.0045 and they are expected to slowly gain the level above and close. Then Canadian dollar, they came down to 1.2969 as an extended downward move and then started gaining the level again, and they are expected to breach the high and go above during the day. Alternatively, they will gain the levels in the case of numerator as well as the denominators that we need to really understand with the help of the live market code page. Otherwise, if you look into that of the chart, you will think that they are making the US dollar weakening or the US dollar gaining move, but you fail to recognize the contrarian moves the players do in order to handle the crosses. Then in the case of Australian dollar, they came down to 75.28. The estimated low was 75.50, and then they went up to almost close to 77, and they are expected to gain the levels above that of the high today. So in all you come across, they are making the moves in the estimated range, excepting yen and the Canadian dollar, wherein they have made the extended downward stoppings. So this is why I want you to follow the levels, and any level near that of the low you can buy and keep the hedge order to limit the risk. In the event if they make an extended downward stop, and you'll be able to capture the profit and keep another hedge order to trail upward as they gain the level, so that either way you will be able to trade and earn money from that other market. Now coming to that of the market reading, today I noted down the initial lows and the highs. So Euro formed the low 1.0755 and they just breached the low by 10 pips to 1.0745 and then come to 1.0756, a brief downward stop before making further upward move. In the case of GBP, 1.2511 is the low. They could also make another downward stop and before making a rise above that of the high 1.2534. Alternatively, they do it in the case of Euro and GBP, the downward stop, and so that they'll be able to easily make downward stop in the European crosses. Then in the case of yen, 112.52 is the low, 113.214 was the initial high. They just breached the high and went up to 113.22 and holding around 113, and they are expected to gain slowly the levels here again. Then in the case of CHF, 99.80 is the low and 99.31 is the high. They just breached the high and went up and holding above that of the initial high, indicating that they are likely to gain more levels in the case of USD CHF. Then Canadian dollar, 1.03022 is the low, 1.3037 was the high. They just breached the high and went up to 1.3040 and came down. So they made an upward stop and to come down to make a downward stop and then start gaining the level. So they are known to make either way stop-ins in the case of Canadian dollar and increase the spread between the initial lows and the high to that of the new low and new high, and later on make the trending move. Then in the case of Australian dollar, 76.43 is the low, and they just breached the low and came down to 76.40 and gone above, and 76.64 is the high. They are not breached it, and they are likely to gain the level. Alternatively, in the case of numerator as well as denominator currencies. So in all, you come across in some pairs they are not breached the low or the high. In certain other pairs they are just breached the high or the low, making the contrarian move. But if you look into the live market code page, Euro, GBP and Australian dollar showing negative net change. The USD and USD CHF and USD CAD are showing positive net change. So basically you find that they are making the USD gaining move. Slowly they will change it to that of the USD weakening move during that of the day. Now coming to that of the trade recommendations. So I kept the buy limit order at 1.0745, 10 pips below that of the initial low. They came down and then they are just expected to go up afterwards. Then in the case of GBP also, another brief downward stop could be seen, and we can take a buy around 5-6 pips below that of the initial low, and then they are expected to gain the level during the European session. And in the case of yen, they could make a brief downward stop, and when they are gaining the levels in the case of euro and GBP, in order to trigger the market to make USD weakening move, and then USD yen is expected to gain the levels along with that of euro and GBP as a contrarian move during the course of the day. So any downward stop is a buy opportunity in all these pairs. Then these are all the market timings. So there are 3 sessions of the day. Each session is subdivided into early, mid, and the late sessions. In between the sessions, you come across the gap time, and there are 3 gap times between the sessions. And the largest gap time is the longest gap time is the gap time between the US session and the next day Japanese session. And early and the late sessions, they handle the majors. Mid sessions, they handle the crosses. During the gap time, they make the false move. So these are all the things we have to keep in mind, and we should remember the timings of each session and also the subsessions, so that we'll be able to easily take appropriate trading decision, reading the type of moves they are doing it in the market. So there is a question from Bren. How many pips could be used to stop the crosses out of with 30 pips or 50 pips? See, the stop should be 50 pips in the case of crosses. The platform provider does not have the hedge facility. Yes, the stop could be 50 pips in the case of crosses, because the volume is relatively less. So they will make, and the spread between the bid and the ask is also higher. So the players will try to make about 40 to 42 pips stop and moves. So if we have 50 pips stop, then there is a less chance for it to be hit. If there are any question, you can ask me. I'll be answering to those questions. So follow the forecast and follow the levels, and then trade accordingly. And whenever there is a quick move in the market, understand the quick moves are false moves in the market, and then try to buy during such quick downward move, so that whenever they make a quick upward move, you exit out of the positions during that of the monthly trend reversal time. During that of the monthly trending time from second week, you can follow the trend, and week beginning falls, you take the buy and book profit during that of the weekend as a position trade. That is the stop and the only one that they will handle in the day, or can there be more majors? It's a stop and the only one that they will handle in the day. I'm not able to really understand what is your requirement. Yeah, they do the stop and from time to time whenever the traders are holding the unfavorable positions. Suppose the traders are holding higher level long, they will make frequent downward stop and in order to give the fear for the traders to liquidate the long positions, and then they make the buy of those lower level sells and then start gaining the levels. And as far as the majors are concerned, say now Euro and USD these two pairs they have to handle in order to make a move in the case of Euro Yen. So what they do is whenever they make the US dollar weakening or the US dollar gaining move, you find little impact in the case of the cross. So Euro Yen, for example, you find it is making a very narrow range swing when Euro and GBP are making the regular US dollar weakening or the US dollar gaining move. So what they do is they make a dip in the case of Euro, then sudden dip in the case of USD Yen. Then Euro Yen will make a drastic drop. Then they will accumulate the stops which are triggered at that time in Euro Yen and start gaining the levels in the case of Euro to start with. Then later on, they hold high Euro, start gaining the level in the case of USD Yen as well. Then you find Euro Yen start gaining the level. So this way they make the contrarian move and gain massively in the case of crosses. I mean, is it only one intentional move in a day or can it be more? Okay. As far as the intentional move is concerned, it will be more visible during that of the trending time. But in a day, there will be only one intentional move because it has to be for 2 sessions. So after that, there is only one session left, and they have to do necessarily the extended move, alternate with it of the intentional move. So as I explained that they don't make hat trick. That means they don't continuously rise or continuously drop for 3 sessions. So what happens, suppose on a Friday, they're expected to make a swing and rise. Then they make the swing and rise and then make a downward stop and during the early European session. And then they make the rise and firm up and then continue to rise during the US session. So the rise will be for 2 sessions. Before that, there will be an extended move on the downside. Even though the forecast says for 3 sessions, but they will try to make it extended downward stop. So you need to understand how they are going to do the swing by looking into that of their respective currencies. We cannot give the overall picture. So the forecast is pertinent to that of Euro and GBP, and you will find both Euro and GBP may follow. Sometime only Euro might follow or GBP might follow, but you will come across the trend being followed predominantly by Euro and most of the occasions by GBP. Because they have to bring in the contrarian move in the case of GBP in order to handle the European crosses. But I cannot give specific forecast in an open forum for each of the currencies. Hope you appreciate it. Okay. Is there any other question? So if you got any doubt, please ask me so that I'll be able to understand to a level of understanding and explain it more in detail. Okay, no question is coming. So I'll just wind up the webinar. So I take this opportunity to thank FX Street for the facilities provided to present the webinar. And thank you all for your patient listening and understanding of the focus method and also the trading strategy. And if you do it following the forecast what I give on a weekly basis, you should be able to really earn nicely from the other market. I thought that I can extend this help to small traders so that they'll be immensely benefited from the market. So wish you all happy trading, happy weekend. See you on Monday.